Chantry Abbott, the host of SimplifyingRealEstate.tv. Whether you're a first-time homebuyer, a seasoned investor, or a real estate professional, our mission is educate, inspire, and inform you to create wealth and financial freedom with real estate. Hey there, so Chantry Abbott here with my good friend and colleague, Drew Bahoravitch. How you doing, buddy?
Good, how are you doing?
So we thought that now would be a really fun time to start talking about what's going on in the market with all this craziness. And I think there are people that are absolute panic mode, and there are people that just don't give a crap and they're still going on vacation. I think I'm personally somewhere in the middle. Yeah. But I definitely don't think panic mode is the thing to do. And we're getting, I don't know if you've had any crazy questions, but mine's like, is the market like 2008? You know, some of those things. So we thought we'd just talk about what interest rates are, because it's been a really weird week for us, right?
Yeah, it's been a wild ride the last 2 weeks.
No kidding. So Drew's been in mortgages for 7 years. He's got a definite passion for finance. I just know that from being around him. He definitely knows his stuff. He's got an MBA from Arizona State. And as crazy as it is, it's kind of fun right now a little bit, don't you think? I mean, it's challenging, but it is an opportunity, and it's kind of fun in a way.
There's always new challenges in this business.
Yeah.
And, if it's not appraisal issues or qualifying issues, the last 2 weeks it's been rates.
Yeah.
So it's just keeps you on your toes and keeps you, keeps you ready and ready for something else.
Right. What have we been, let's maybe just kind of fill everyone in a little bit. What have we been seeing in rates before coronavirus, during current situation?
Prior to 2 weeks ago, the coronavirus caused rates to drop. It got to a point, I even shared a post on my Facebook. It got to a point that $2 trillion, 1 out of every 3 mortgages in America could be refinanced and save a significant amount of money.
So how many are there? 11 trillion in mortgages? Is that something I heard or something like that? Or
yeah.
Right?
So it'd be like $4 trillion in mortgages that could be refinanced.
Right. And the problem there, maybe you know the number, the capacity of the country, meaning the mortgage company's capacity. What is that? Do you know? I know somebody said that.
The projection, we can do like $1 trillion a month. So there was 3 to 5 months of business that if everybody had capacity, we could jump on it, and it would still take us 4 or 5 months to get that all closed. Yeah.
And loans can't get done in 3 to 4 months because you lose the interest rate. So most likely everybody did a little bit of double time, and there was probably going to be 1.5 trillion or so in mortgages done when there normally is only $1 trillion.
Yep.
There you go. So rates were January 1st. I don't think there was any impact in our interest rate environment. Let's just say January 1st. Just estimate. What do you think we were doing rates wise?
Like 4 1/8.
Yeah.
Right around 4%.
4%. And at the time it was like, that's not the lowest they've ever been, but it sure isn't far from it.
Right.
And we were still doing tons of refinances.
Oh yeah.
We were still doing tons of purchases. It was still an amazing opportunity.
Oh yeah.
Right.
It was a good time, and I had an email chain with John P.
Peccaro or whatever.
With Guild. He's our head of capital markets, and asked him at that time, because I had an agent say, what do you project for rates? And so I asked John, I said, hey, what's your expert opinion? What are we going to see in mortgage rates this year? Because I had read an article, Bank of America projected the 10-year bond was going to move to, I want to say it was 1.85.
Okay.
And they projected that by end of first quarter, but for sure by the end of the second quarter.
Okay.
And so he was saying, we're going to see rates move up, probably be in that 4.5 range, and that 10-year is going to move up.
Yeah.
What's it at today?
Well, depends on if you asked me this morning, right?
Yeah, right.
So that's the craziest thing about rates right now is it's like depends on if you asked me this morning or this afternoon, because they are moving because there's so much volatility. But so we go to coronavirus stuff starts to impact us. This was probably almost 3 weeks ago, right?
It's almost 4 weeks now, but the crazy thing at the beginning of the year, going back to that, was we were projecting rates to rise.
Right.
Economy is strong.
So let's just say
all these reports are coming out. There's no reason. The stock market's all-time highs.
Yeah.
There's no volatility. It's virtually at a minimum, and everything is looking good. And then China gets corona.
Right. So rates go from 4% to roughly the end of February 20th or something.
Yep.
They go to 3%.
Yeah.
Right, roughly.
Oh yeah.
In the matter of about a week. So we're scrambling.
Yep.
More folks wanting to refinance than we could actually service. We're doing our best.
Yep.
And we hopefully got as many of them in as we could and got them locked.
Yep.
Some folks hang out on the fence and they didn't quite make it.
Yep.
That lasted for about a week and a half.
It was almost 2 weeks.
Okay, about 2 weeks. We were sniffing 3%. Then what?
And on a 15-year, I got a couple of those at 2.75.
Yeah, insane.
Like
almost free money, right?
It's free money.
Yeah. So then the last 2 weeks have been free falling.
Yep.
Interest rates have went from, well, there wasn't even a rate choice. I guess that's the hardest part to really get the public to understand. When you get a mortgage, there's two ways a mortgage lender makes money. One is the yield spread. That's the time in which they have the mortgage, the payback. Then there's an upfront cost, and you can call it whatever you want, but an origination fee.
Yep.
The origination fee is safe if these loans are going to be paid off early, because then the lender gets their money.
Yep.
If you're going to have the loan really long term, then you make money on the interest. But if you're only going to do a mortgage and it's only going to last 6 months, these mortgage companies in the long run, there's nothing there unless they're charging an upfront cost.
Yep.
So when everyone freaks out and the market plummets the last couple weeks, there's been such a cost in there that I'm not sure if I've locked a loan in the last week and a half. I don't know if I could. It was just so expensive that it just wasn't even an option. Have you locked any or even know of any getting locked?
I locked one earlier this week on a good day, and the borrower's in a position that she needed to lock. She needed to get that rate. It made sense because we were getting rid of mortgage insurance.
Right.
So for her, her rate was actually getting a little bit better than what she had before, I think it was costing a point. But for her scenario, that's the only one I've locked.
Yeah.
Otherwise, we were essentially hard money lenders.
Yeah, you couldn't lock one.
Right? Because everything was costing like a point to 2 points. Yeah. I got hard money guys that'll do 2 points. So
we can only charge so many points. Even if a client wanted to lock a loan, sometimes their cost was so excessive that we couldn't actually do it because it would become high cost and it wouldn't pass the smell test, and we couldn't even actually do them a mortgage.
Yeah, Fannie Freddie won't touch them.
So we were on hold for a second.
Yep.
Well, this morning we both looked and we still couldn't lock a loan.
Yep.
Hopefully this is a really good sign. They actually are starting to make sense this afternoon.
Yep.
They've probably moved, I guess, from a public thought perspective. What would you think? 0.5%?
Yeah,
just
about
today in improvement, lower in rate. So just today we've had that much of an improvement. And mortgages follow mortgage-backed securities in the mortgage bond market, and it's a supply and demand thing. And the government, when the economy crashed in 2008, if you guys have heard of quantitative easing, they spent billions of dollars in order to buy mortgage bonds and help keep the interest rates low. The reason being is that a big part of our economy is mortgage and homes and real estate and construction, and it all ties in together.
Yep.
And if mortgage rates are 10%, that's all going to come screeching to a halt because it just isn't affordable anymore.
Yep.
So do you know I don't know how much they're spending or what that looks like, but they're spending billions right now today buying mortgage bonds to keep the rates as low as they can, right?
Right.
I don't know how much they're spending, but it's billions.
It's supposed to be $500 billion. They're putting into mortgage-backed securities and treasury bonds.
Gotcha.
So how they spend that, where they spend it, I think that's part of the reason we have this volatility is investors are wanting to see where is the federal government putting this money so that we can make safer bets.
Yeah.
So that we can have smarter, safer investments.
Right.
And part of it too is when they see that money go in there, great. Now rates will come back down.
Because the free market will start investing into mortgage bonds because they feel comfortable that they're not going to plummet any longer.
Yep,
they're going to feel safe.
There. Yep.
And so there will, in my opinion, right? And this morning, if we would have done this podcast, I would have said, we can't even lock a loan.
Yeah.
It's not even an option. Call us on Monday.
Yep.
At this very moment, Drew and I both just looked. Somebody with really good credit and just a normal, pretty solid loan situation. I think we're like at 3.8, 3.9, which is incredible. And that's even after 2 weeks of falling, the hysteria, the panic, the freak out, it's like, here we are 2 weeks later, 4%.
Yep.
Like, that just isn't a bad place to be.
Right. And where's the bottom? Right.
And what
that's what we're going to start being asked is,
yeah.
Is this the blip we're waiting for? Is this the bottom?
Yeah.
Is it going to shoot back up to 4.5 next week? And
right.
Or are we going to hang around 4%, or is it going to go to 3.5 again?
Yeah. We've never had this happen before.
If we had a crystal ball,
yeah,
I wouldn't be working much longer.
Right.
Right. We'd short the market, or we'd call the market.
Yeah, and it's anyone's
guess.
Billionaires.
So nobody really knows.
Yeah, no one's ever seen this before.
Yep.
The average interest rate over 70 years is 8% on a mortgage.
Yep.
So to be at 4 or anywhere near 4 is freaking insane.
Yep.
If we can hang around there, and I'm hoping that there is some reality here, because if we're looking at January, the reason I went back to January 1st is there was zero impact on our market and our interest rates, in my opinion, from coronavirus. So January 1st, we were around 4%. Today, we're around 4%. If that levels itself out, almost nothing happened except for a month of hysteria in the mortgage situation, right? Crazy low, ridiculously low, didn't make sense low.
Yep.
No reason they should have been that low.
Yep.
To went so high that it didn't make sense they went that high. To are we currently now where we're supposed to be? I don't know. I guess we'll find out. But it's where it was before. If your plan was to buy a house this year, this morning we weren't locking you in on a rate. Yep. Or if you are looking to refinance, we weren't locking you in on a rate. But we're trying to get as many people prepared for a refinance or a purchase to be ready to go if that opportunity hits. Because a lot of times, if rates should be 4%, the pendulum swings too far.
Yep.
Meaning there potentially could be an opportunity that rates go lower than they should for a second. I don't know if that's going to happen, but typically things overreact.
Yep.
Overreact. It's like this permanent overreaction.
Yeah.
So can we time that with folks? And I don't know that. We'll never know when we're at the total bottom.
Yep.
But all of our people should be getting ready to look at those options. And that's being pre-qualified, having an application done, having your credit pulled, having all those things looked at and ready to go. And if they don't go to where we're thinking, that's okay.
Yeah.
But if they do, you better be ready because it could be a potentially really short opportunity.
Yep. So I would bet I threw in probably about 20 refis over that 2 weeks, and I would bet 10 to 15 of them I have an appraisal waiver. So I don't even need an appraisal. So
tell everyone kind of how an appraisal waiver works.
So Fannie and Freddie have started tracking their data. They've been doing home loans for ages.
Yeah, 60, 70 years.
They just now got smart and realized that data is where all the money is. And so they started tracking their own data.
Zillow,
and they built these models, Harvard grads built these models for them that says, here is how much homes have appreciated in this market, in this neighborhood.
Wow.
And it's tied to an address.
Okay.
And so we can't, on purchase, it's a little trickier because we can't put in an address until we've got a contract to know if we'll get a waiver. But on refis, we put in that address, we put it through their automated underwriting system, and it'll tell us, hey, that value is good. You don't need an appraisal.
There you go.
Saves the borrowers $500. Save us, the guesswork of what's the appraisal going to come in at? Do we need mortgage insurance?
Right.
I had somebody that thought their home was only worth, I can't remember the exact number, but let's just say they only had 10% equity.
So which means they'd have mortgage insurance.
So they'd have mortgage insurance.
Anything less than 20% equity have mortgage insurance.
And typically you won't get these appraisal waivers unless you've got at least 20% equity.
Right.
So I said, I ran it, all right, 10%, didn't get a waiver. I said, what if I just bump this price? What happens?
Yeah.
I got a waiver.
Wow. I don't think I've been trying that.
No appraisal, no mortgage insurance.
Wow. There you go. That was huge.
And so these people are stoked. Their refi makes total sense now. We even got day one certainty on their income, so I don't need any income docs. So we're doing a no doc loan, getting that guy from 4.75% down to 3.5%.
Getting rid of his mortgage
insurance. He's saving $300-400 a month.
Yeah. Wow. And one of our problems, I'm glad you brought it up, is the timing of appraisals. We only have in our little teeny market a very limited number of appraisers.
Yep.
And so appraisals went because we had that little surge of business for 10 days where volume tripled.
Yep.
Appraisers went from 10 days to 3 weeks. Yep. And there's almost nothing anybody can do about it because there's only a certain number of appraisers and we don't get to pick the appraiser, and it just sort of is. You just throw an order out there and they get it back when they get it back. And so as many of those waivers we can get, it's huge, especially with weird times. People might not want too many folks in their house, and who knows, right? So
I just had my first one of those today.
There you go.
Was the seller wouldn't let the appraiser in.
Yeah.
So
you sell it.
Probably be getting an extension on the deadlines on the contract.
Yeah.
But.
So part of the appraisal waiver is the property, and part of the appraisal waiver is the strength of the borrower. Like what's your loan to value, what's your credit score, what's your debt to income. They're kind of taking all that into account. So if you've got somebody that they're buying a nice house that clearly has comparables, but they're putting a very minimal down and their credit's kind of just mediocre, they probably are going to have to pay for an appraisal just to make a lender feel really comfortable about their position, right? Because you don't really have anything to hang your hat on.
Yeah, and it's only conventional loans.
Right.
So you couldn't do that on an FHA.
Or a VA or a USDA. Or, that's a good point too. Cool. So we're wanting to tell people, don't panic. If you lost your job, obviously you probably don't want to buy a house for a minute.
Yeah.
If you haven't lost your job, or you are definitely trying to make a plan to buy a house, we still want to have a get mortgage ready plan. Even if you say, I don't want to buy for 4 or 5 months because I'm really nervous, and there are going to be some of those folks, and I don't blame them. I get it. Let's get you pre-approved. Let's talk about the numbers. Let's talk about one of the things most people don't know is we can run simulators on their credit. So if you have a 650 credit score, you can just go at it at your own and start working on it, but you might be doing the total wrong thing, where we can run an actual perfect simulation that says if you do A, B, and C, your credit will be this in 4 months.
Yep.
So they need to be getting with us to look at that.
Yep.
I think when the dust settles here, there's going to be an opportunity for buyers because there potentially could be fewer buyers in the market. We've had an inventory issue, which means we don't have enough homes for sale.
More buyers than sellers.
More buyers than sellers. And so it's created this limited supply of homes. And so it puts a buyer in a weak position because they're all trying to buy the same house.
Yep.
If some people lose their job and have to take a step back, those that are in a good financial position, there'll be less buyers.
Yep.
And that will happen to some degree, I'm sure.
Yep.
Right? I mean, when this settles down, there's going to be a really good opportunity for buyers. Yep. We could be wrong, but I also think interest rates are probably going to be at a really good spot too.
Yep.
And those that are looking to start the process at that point might be too late, right? You need to have done the process.
Yeah, they'll be behind the curve because there'll already be, like last night and today already, I've met with 2 clients that they're on a kind of a watch list.
Yeah.
Like they've got good jobs. They're not going to lose those. They're secure, but they are looking for homes and watching rates.
Right.
And they're waiting for the right opportunity. And as soon as they go, because they both brought in all their paperwork to me.
They'll be ready to go.
So they're full pre-approved.
Let's get you ready.
We'll have them underwritten.
I think that's
guarantee.
Maybe for people to understand, we're considered an essential business.
Yep.
So like Nevada and California have shut down, right?
Except essential businesses.
Which would be
Banks.
Mortgage people.
Yep.
Granted, they're working from home, but like Guild is so set up for that. We essentially could work from home and not skip one beat.
Yep.
So just know that we're still going full steam ahead. We're still probably going to lock some loans this afternoon, it looks like.
Yeah.
We're going to have closings today. We had closings yesterday. We're going to have closings Monday. We're going to lock rates Monday.
Yep. Title companies are open, recorder's office. It's all almost electronic. I don't even know that the recorder.
Yeah.
Even if they shut down the county offices, I think the recorder will.
Got to find a way to be at home and
still be available. Yeah. So
I know some people are losing their jobs. So you would think there's going to be a few foreclosures. Maybe that's not the worst thing in the world. To put some inventory on the market we could use. Most of the people are going to get unemployment. It sounds like, I don't know if you've seen the latest, it sounds like they're probably going to get some sort of a government stimulus.
Yep.
And
Guild announced, I think I saw an email chain from you on it, that for those borrowers that are struggling with payments, we're working with the federal government to figure out what stimulus the government's offering, but we are working with people who can't make their payments this month.
There you go. Already this month.
Yep. We've already call Guild. If we're servicing your loan, call us. We're going to work with you. Call our servicing department. They'll work with you on your situation. We'll get you squared away. We don't want to leave you high and dry.
So if this lasts a handful of months, they're going to get unemployment, stimulus, possibly skip some house payments.
Yep.
extend the tax filing deadline if that helps you out better.
Yep.
I loved your tip on the W-2. Tell us about that.
So the W-4.
W-4.
So any W-2 employees, you select, most people call it withholdings, how much tax to withhold from your paycheck.
Right.
So I actually went in there the other night and I marked it as exempt. Now, most accountants will tell you, hey, that's a little dumb because you're going to end up owing a ton of taxes. That means no tax return next year.
Yeah.
Well, to me right now, having a little extra money in the bank in my rainy day fund is far more important than paying Uncle Sam.
Right.
So I'll work out that tax bill next year, and hopefully that's all still sitting in my savings account.
Sure.
I'm not going to go blow it on a trip to Cancun, but it just gives you that little extra peace of mind.
So especially, I think that really makes a ton of sense. Let's say that you've got a family that has 2 income earners and one of the spouses loses their job, and hopefully they get unemployment, but most likely that won't be equal to their wage.
Yep.
So one of the options is the other spouse could change their tax deduction, change their whaling. Their tax withholding is probably the way to say it.
Yep.
So instead of the government taking $200 a month out of their paycheck or more, whatever their situation is, they would take zero.
Yeah.
Zero.
So when you market exempt, the government takes nothing.
So you get the whole thing, and then you're responsible to pay those taxes when tax times come.
Yep.
That could be a game changer for people.
Yeah.
Let's do, what would it be? Let's say somebody makes $4,000 a month. Their take-home pay is, let's just say $1,000 or $2,000 every 2 weeks. And if they get 30%, you think that's the average maybe?
Yeah,
taken out?
I'll bet about 25-30% withheld.
Let's say it's
taxes.
25. So if you have a $2,000 income, you're getting taxed withheld at 25%.
$500 is going to the government.
So you're getting $1,500.
Yep.
So your income is $1,500 times 2, so you're $3,000 a month.
Yep.
What you're saying that you could do now in a temporary situation, exclude that. Go in, change your W-4 with your employer.
Yep.
Become exempt. They're not going to hold taxes. You're going to owe taxes on the money. So pay attention to that.
Yep.
But not till next year.
Yep.
Not till April of next year. In fact, we're 13.
And if you do an extension, October of next year.
We're 13 months away. If you extend, you're 18 months away from having to pay that money back.
Yep.
Which is great if that's what you need.
Yep.
That person went from making $3,000 a month take home to $4,000 a month take home.
Yep.
Wow.
That's a 30% pay increase, right?
That's a large part of most people's mortgage payment.
And if you're in a higher tax bracket, it only makes more sense.
Yeah, wow. That's a good tip. I love that. Yeah. And then if your other spouse is on unemployment and it's a little bit less, that probably almost just broke you even or came close.
Yep.
Very cool. So we're still here. We're still open. I know it's weird. We all know that it's weird. There's tons of uncertainty. My personal thoughts are stick with your plan. Be very cautious. Stick with your plan. Be ready to go. Don't just sit completely out. Don't just say, oh, this is just, we're going to crash. Because if you think the market's going to crash, it means that you're betting that our federal, in my opinion, it means you're betting our federal government basically folds.
Yeah.
The reason I say that is they're spending so much money to keep interest rates going. The top 500 companies in the world are still going to be going. They're going to keep the stock market. See, when this crash happened in 2008, it was a foundational issue. Yep. It was a foundational issue at almost every single financial level. And so that was deep.
Right. It cut buyers out of the market because their stated income loans went away.
Right.
So you could have somebody who's a waitress just come in and say, I make $100,000 a year and buy 3 properties.
Right.
If you've seen the movie Big Short, you know what I'm talking about.
Right. Or other professions.
But that was reality, right? Or other professions. But that was the reality. So when you start saying, no, now I need to prove your income, you just cut so many buyers out of the market.
Right.
This isn't cutting buyers out of the market. This is just some people are going to have laid off. They're going to have some tough times ahead. Yeah. Some industries are hiring like crazy.
Some are hiring like crazy. I actually just seen grocery stores. Yeah.
Hospitals, healthcare, they're all hiring like crazy. So there's opportunities there too.
We actually made 2 offer letters this week to employees. We're hiring.
Yeah.
We didn't mean to hire right now, but we aren't canceling our plans to hire by any means. We're still going forward. So let us know how we can help answer any questions. Drew Bahoravitch, Chantry Abbott, Guild Mortgage, 674-1090. We'll share our cell phones. Maybe we'll do this next week if anything new happens.
Yeah. Yeah, we'll keep people up to date.
Have a good one.